Good evening, everyone. It's January 29th today, and today I want to discuss with you on how to properly trade penny stocks to actually make a profit. So penny stocks are kind of this incredible stock out there that someone can make or lose quite a bit of funds very quickly. And so one has to be very cautious and astute when trading penny stocks. It's very quick that someone can make a big profit. I've personally made some very large capital gains from penny stocks, but likewise, you can also lose money very quickly. For example, say you buy $10,000 worth of a $30 stock, and this stock is, or a 30-cent stock, and the stock reaches $1, you just made $7,000. And I've actually done trades of similar value and have made some pretty large five-figure profits. So yes, money can add up very quickly in the realm of penny stocks, but you can also lose money very quickly. Now, often penny stock promoters will only showcase the positive aspects of penny stocks, but they do not show people the negative aspects of penny stocks. And this is something that is very much gray area with the SEC, and it's they can get away with quite a bit, but likewise there's just a lot of gray area here. Okay, so some ways though that someone can make money here is number one, ignore penny stock success stories. These are often major high PR stories that you read in emails and magazines, and they're promoting these people and saying X person made 2 million or they made 5 million from this penny stock. This is a way to get people to buy into these and pump up the value. And often also, these stocks have reached all-time 52-week highs, so this stock is likely to plummet very soon. Number two is disregard tips and read the disclaimers. Penny stocks are sold more than bought, and tips often come via email newsletters, and the free penny stock newsletters are not giving you these tips out of the goodness of their heart. Many times, investors pay these writers and magazines to write these articles, and they're making false promises about these companies, and it's also based on that very high mark of the stock. So read between the lines and understand the PR aspect here. The next one is sell quickly. One allure of penny stocks is that you can make a quick 20-30% within minutes or seconds, but unfortunately you can also lose that. Now, you could also make 150 to 250% or more, and that's where someone really has to be cautious here and take a nice win and be thankful for it, and don't get too greedy. The next thing is never listen to company management. In this world of penny stocks, there's a lot of managers and people running these companies that are trying to raise money for their companies and try and get people to pump into their companies. There are also ways to enrich insiders, and you have to be aware of these promotions and stay away from being deceived by this. Focus on the things that you can't see and just be careful here. Now, the next thing is don't sell short. And that's so important because penny stocks, for one, there's many that you cannot short. Other ones have a very limited number of short shares available. So 50% or if you're shorting a stock here on a penny stock, you could lose money actually a lot quicker than if you were buying it to gain. And it's one of the most difficult shorts of any stock type. So this is best left to professional traders. The next thing is to focus on stocks with high volume. Trade with stocks that are make trades where there's at least 100,000 shares a day being traded. And because if you trade with low volume, it can be very difficult to get out of this position. Stocks that are trading less than 100,000 shares a day and are under 50 cents a share are generally not liquid enough, so stick away from these and you'll be much better off. The next thing is to use mental stops, because the bid and ask spreads of penny stocks can be high as much as 10%. The hard stop losses can actually cause someone to lose a lot of money. And it takes a lot of concentration, but you always have to keep that risk reward ratio in place. If I want to make $1 on a $3 stock, I will cut my losses at 20 cents a share, so I have a 5-to-1 risk reward ratio. I aim for a 3-to-1 or 4-to-1 typically, but if I think $1 stock has only 50-cent upside, 2-to-1, my mental stop loss will be at 10 cents because the risk reward ratio is better. The next thing is buy the best of the bunch. Always look for the best penny stocks that have had a breakout, an earnings breakout, because these are going to offer the most opportunity. There's going to be the most volume of shares being traded also, and also look for ones that have reached high points. And this will also help limit the number of possible trades, which is good because you won't be too overwhelmed by the options available, and you'll most likely find the winners. The next thing is don't trade large positions. This is especially important with penny stocks, and one of the main reasons why is because of the lower number of volumes. You can actually have a hard time selling your shares or selling them at a rate that you would like. So it's often best to just not trade more than 10% of the stock's daily volume. Stick to lower quantities here, and it's also safer because that's general investment protocol. The next thing is don't fall in love with a stock. It's most important with penny stocks. These are stocks that you don't have emotional connection to. They're simply to make some money and get out of. Penny stocks are a great tool to have in your toolkit, and always exercise caution. But when you see a great opportunity come, don't be afraid to buy in.